back to the weekly video. Myself, Brijesh Bhatia from Dealmoney Securities Pvt. So last week we have seen mixed bag of momentum. US and European markets were on a positive note, and if you look at the Dow, ended nearly 1.6, 1.7% positive. But if you look at the Nasdaq, it's been tug of war between 90 and other stocks, and even though Nasdaq ended on a negative note, Dow managed to end on a positive note. Even if you look at the S&P, has managed to gain on a positive side. If you look at the DAX and other European indices, they have ended on a positive note with 0.5% to a couple of percent positive. Even after, if you look at the European numbers on the COVID side were increasing, it has managed to end on a positive note after a sell-off the previous week. Coming on to the Asian indices, we have seen a mixed bag. If you look at the Nifty, we have come back very strong with the V-shaped recovery, and nearly gained around 3% in the momentum. What was the leading was the Bank Nifty, which has gained around 6% in financial. So we'll be discussing on the Bank Nifty to Nifty ratio in today's video as well. So stay tuned on it. And if you look at the Shanghai, which we have discussed in last week video as well, 3170, 3180 will be very crucial for Shanghai Composite Index. And if you look at the last week, Shanghai was down by around 3.5%, but still managed to hold 3200 levels. We think that 3170, 3180 is, if breached in the current momentum, we might see a huge selling pressure coming onto the Shanghai Composite, which could also have an impact on Indian indices. But yes, that's level need to be watched very carefully. Coming on to the Indian markets, though it was a truncated week, Friday being off, the last 4 trading session we have seen a huge comeback, right from 10,800 levels to back to 11,400, 11,500 levels now. 200 days exponential moving played its role very strongly. 10,838, the 200 exponential, we have seen markets dipping to 10,800, coming back very into V-shaped recovery. And now, if you look at the last week video, we have indicated a short bias, and that was stopped out at around 11,200. We have indicated a short bias. It was stopped out because we were playing that it might resist at around 50 days exponential moving average, but it has taken those very fast and furiously, which was 11,177, and it was taken very strongly by bulls. So overall, if you look at the momentum, markets now about 150 days average, about 200 days average, and now it's breaking out of its falling trend line. If you look at the charts, and if you look at the Monday session, we have opened with a positive bias about 11,500. So we think yes, momentum has again shifted to the bulls strongly, I would say. Though we were bearish last week, we have managed to hit a stop loss and we went wrong. But this week, we think if you look at the momentum is very strong for bulls now. The highlight over here is the Bank Nifty, and if you look at the Bank Nifty chart, we have seen rising channel and support right at 20,500. We have again, if you look at within that rising channel, we have seen a falling channel breakout, the red lines. If you look at the charts, it has broken out of on the positive side at 21,600, and we are back towards 22,500 levels now. We still think that Bank Nifty has a huge upside momentum because it is one of the underdog in the recent momentum. We have seen IT, we have seen Reliance, that those are playing out very strongly. Now we think Bank Nifty and financials would be the one sector where one should keep on for the October series. Why? First, if you look at, again, we have, as I said, Bank Nifty is trading into rising channel formation. Second, if you look at the falling channel formation, it's breaking out. And if you look at the Bank Nifty rising channel upside, the blue lines upside, it's around 25,000 levels. So we still think that 24,500 can be added into the October series for the Bank Nifty. Similarly, if you look at the financial services, they are breaking out of its previous resistance zone, and we think these two sectors were the underperformers for quite long now, and we think that it might end that journey of underperformance. Simultaneously, if you look at the Bank Nifty to Nifty ratio charts, and we have discussed this in previous videos as well. Now, if you look at, we have seen 1.88. What we have done is we have taken Bank Nifty price and divided that with the Nifty price. So it's Bank Nifty to Nifty ratio chart. And if you look at that price, we have seen a lows of around 1.88, coming back very strongly to 1.95. And look at the Thursday's momentum. That was again a huge upside take. And even if you look at the last whole week, Bank Nifty was up 6%. Even into a truncated week, Nifty was up around 2.8 to 3% upside momentum. We think that this ratio chart is clearly indicating that Bank Nifty could outperform in the recent times. And we think that even though Bank Nifty can move to 11,700, we think Bank Nifty has upside potential. So if I just look at 11,700, what we are expecting on Nifty, which is another 1.5%. But if I just look at the Bank Nifty, we are expecting around 24,000, which is around 1300, 1400 points, and that's around 6-7% of upside momentum. So if I look at the 1.5% to 6-7% upside momentum, Bank Nifty stands out to be strong. From that is clearly supported by the Bank Nifty to Nifty ratio charts. So we think stay focused on October series for Bank Nifty and financials, where we could see a strong upside momentum. And once 23,800, 22,200 levels are achieved, look to book profits at regular interval on Bank Nifty. And we think Nifty 11,760, 770 levels previous might act as a resistance, but Bank Nifty still has a huge upside against the Nifty. So stay long for the October series on Bank Nifty, and we are expecting 24,000, 20,200 as an upside targets. Thank you.